Jackson Hole has been and gone. Nvidia is next Wednesday. Which is top of mind for you, Alison?
I think, we've very much focused on the bottom up and focus on where the technology cycle is, and the key focus is going to be on earnings next week. And, seeing if the enterprise demand pick up, that we saw some signs of that from both Cisco and Lenovo in recent weeks. If that carries through, not just to Nvidia, but we have Dell and Network Appliance and Pure Storage all report next week as well.
Okay, I love how you're going bottom up here, Alison. Does any conversation around the dinner table or conversation at big conferences that you're going to at the moment end up with people saying, boy, your industry is just sucking up all the oxygen, but also all the passive money? And is there a worry about indexes having to come in and rebalance here in some way?
I think we always come back to fundamentals, and there's always a focus on, will interest rates, result in this rotation into smaller caps? Is there necessarily going to be breadth? And I think if you look back even to 1990, when you see, trillion-dollar companies, the pace at which they've reached 2 trillion has been faster and more likely than companies at 100 billion going to 200 billion. So technology always tends to be quite size agnostic, and those large cap winners, when they achieve scale and key competitive advantages, can continue to grow on that in spite of the interest rate environment through rising and falling rates. So we're quite agnostic about the size of companies. And, the indexes, just now there are winners and losers in those large cap names. When you look back to prior cycles, not all of the past leaders become the leaders in the next cycle. So we think it's a great time to be an active investor and actually choose which of those companies are going to lead in this next wave.
So does Nvidia just stay the main company that benefits from a picks and shovel perspective? Do others win? And indeed, when does the investment coming from the hyperscalers pay off to them too?
Yeah, I think, for Nvidia, we had many of the same questions about Apple during the mobile era. Could Apple continue to win? And we do think that the majority of the value in parallel processing is accruing to Nvidia, but that's the majority of it and not all. And we will, through time, just as we've seen previously, see a broadening out of beneficiaries. And on that return on investment spend on AI, just as recently as a few days ago, we heard Walmart actually talk about the huge benefits to their product catalog, being able to, take 850 million pieces of data that would have taken them 100 times the headcount before. So real productivity gains that is coming from that AI spend. We've heard Andy Jass's blog today talking similarly about the number of developers that they can save with faster coding. So we think that will continue to encourage spend, and that broadening of spend, not just to the hyperscalers, but eventually to enterprises as well.
To that point, Jackie and the team in New York, let's bring back that chart you had a second ago, some of the mega caps and their performance in the session. Because, Alison, in your biggest fund, these are all names you hold: Microsoft, Amazon, Alphabet and Meta, not in that ranking or order in terms of allocation. When all is said and done, August 29th, what would need to happen with Nvidia's earnings for you to rethink your allocation to each of those names going forward?
I think even if you look back at last year, we don't react just to one quarter of earnings, because a lot of positioning come into that. But we think we've already seen evidence from all of the reports of those companies that you just saw that they are committed to continuing to spend where they see a return. And we think Nvidia's results will just continue to show that they are seeing strong visibility and seeing that broaden. So, we don't really see that as being an event from Nvidia that's going to materially change our view on any of those mega caps.
Alison, is there anything that excites you outside of the US-listed mega cap tech names, anywhere else in the world?
Yeah, we see lots of exciting new companies. Particularly, we see some, exciting emerging technology leaders in India. We also see, through the US market, there are several areas that are just emerging in terms of the productivity gains that can be had from artificial intelligence that are being underappreciated, even in some of the contract manufacturers, where we see trends towards deglobalization, towards focus on higher standards in supply chains. That some of this AI spend is actually trickled down to some of the companies that will actually have to manufacture this, not just TSMC for Nvidia, but the servers, the storage that will be made from many of these hyperscalers. We think you'll start to see that accrue to some different names much further down the market cap curve.
Alison, that's really interesting. But again, we're sort of talking about the infrastructure layer. Where will the money go from the application layer at some point, do you think?
Well, it just takes time. And we've seen that before, when we had the mobile era, between when Apple launched its iPhone in 2008 and you actually had the IPO of Uber, you over 10 years of developing the App Store, developing applications. And, we do tend to see, and this has followed a very similar pattern for AI, you tend to see advertising benefit first, and then we see e-commerce, we're hearing that from Walmart, and then you start to see enterprise software, some productivity gains, and then eventually that filters into other new applications, many of which we won't have thought of first. But this happens over multiple years, in technology, proper waves rather than just hype cycles. These take, 5 to 7 years to play out. So investors shouldn't necessarily look and think that investments have to be in those applications today, because many of those still have to emerge as we start to see, the interface for AI for consumers still evolve somewhat over the next few years.